Hey everybody, I hope everyone's had a great week and welcome back to another episode of the SGK Wealth Compass, where financial insights are clearly explained. Today is Friday, August 14th, and as always, we'll have John Steigerwald and Eric Randolph tell you a little bit about what happened in the markets this week. I hope you enjoy it.
Good morning, everyone. My name is John Steigerwald. I'm CEO of SGK Wealth Advisors.
And I'm Eric Randolph, CFP and Portfolio Manager.
Eric, normally we begin our weekly focus with market talk. Today we're going to switch it up a little bit. I had a client ask me earlier this week, is SGK taking new referrals? And the answer is absolutely. Yes. Yeah. There's nothing that makes us feel better than getting a client referral. We really appreciate it. Eric, I thought you had a good idea on that front.
As a matter of fact, come to find out that some of our clients have taken the weekly newsletter that we actually email to you, and they've been forwarding it to some of their friends, neighbors, relatives, etc. And then, of course, that also includes the link to what? To this podcast as well. So again, nothing better than actually see us in action, actually discussing our theories and our feelings about what's happening as far as the markets are concerned.
Yeah, so we greatly appreciate that.
Absolutely.
Thank you very much.
Yeah.
Eric, we had some economic news out this week.
That we did. This week, we actually had the CPI and the PPI numbers come out. And again, we think that this might take some pressure off of the Fed going forward. So CPI numbers actually came out. Ex-food and energy rose 0.2% in July, 2.5% year over year. This is actually the slowest pace we've seen since March of 2021, as a matter of fact. Why, or kind of what's going into this? A couple of things. The energy shock we've seen from the Iran war may be slackening a little bit.
Sure.
Right. We also may have been helped by the fact that there's been a record decline in lettuce prices. This is tied to the cyclosporin outbreak.
Salads, apparently.
Yeah, right. Never
Understandably.
would have thought it, right? Again, but all these things you see in the news actually do sometimes have an economic impact. There was one outlier, though, and that was the tech arena. The computer, software, and accessories actually jumped a record 21.2%. Again, why is this related to the global shortage of memory chips?
AI and data centers.
Yeah. Again, the PPI numbers actually were much in kind. We saw a rise there, rose 4.7% from year over year. This is down from 5.5% during the month of June. The month-to-month numbers, is ex-food and energy, rose a mere 0.2%, to which shipping and warehousing costs actually fell 1.8%. Why? Again, more evidence of the high fuel costs actually starting to slacken somewhat, as a matter of fact. But I know we got some news in the small business arena.
We did. They do a survey each month. And interestingly, small business optimism rose the most in a year, 2.4 points to 99.8. It's a good sign. And it looks like the share of owners planning to hire hit its highest mark since October 2022. Plans for new equipment investment also reached their strongest reading since the end of 2024. A little bit surprising given the conflict in the Middle East, inflation, which you just talked about, but it was good news indeed. Eric, we had news on the housing and labor front. Why don't you
did. So not a lot of good news coming out of the housing sector. Existing home sales actually fell 1.7% in July to a 3-month low. Median sale price of houses actually rose 2% to $434,000 per home. This is the highest price we've seen for any July on record, as a matter of fact, unfortunately. Add that to the fact that the 30-year conforming mortgage actually hit a 1-year high. It's up to 6.81%.
We were talking earlier this year, was dipping below 6% at one point. So that's
for
a
a short
jump.
while.
Yeah.
Exactly. And so this obviously is actually sidelining a lot of buyers. First-time home buyers actually made up only 29% of sales. Is down from 33% only a month prior, as a matter of fact. On the employment scene, there's been some motion there, but not huge differences. So ultimately, what we saw was the new unemployment claims actually rose 9,000 to 209,000. Continued claims actually fell to 1.78 million. The 4-week average actually held steady at about 199,000. So what does this mean? Basically, it's for the most part steady state. There's some motion that happens. This is normal summer noise.
So we are keeping an eye on the labor market, though. The economy shed jobs last month for July, so it's something we're paying attention to here.
Absolutely, we did. But I know that we got some news from some of the Fed governors and also on yields.
We did. Chicago Fed President Austin Goolsbee, he's a notorious hawk on the FOMC. He called inflation the biggest problem facing our economy right now, described the labor market as stable but not strong. He hit the nail on the head with that. The flip side, Richmond Fed President Tom Barkin, a little more dovish, argued for holding rates steady, saying much of today's inflation is coming from shocks like the conflict in the Middle East that should pass. Barkin also warned that price pressures, however, could stick if supply chain problems persist and the AI investment boom continues, which makes sense. The Fed left rates steady at their August meeting. They meet mid-September. A month ago, the odds of a rate increase were over 70%. Now it's just over 30%, in large part because of the labor report for July, but also due to the inflation numbers that you talked about, which came in better than expected. We have 2 more prints on each early September, so they'll be paying very close attention to that.
So we'll have Jackson Hole in this month and then next month.
Yeah, Jackson Hole is the gathering of central bankers. Beautiful location. And everybody's looking forward to Warsh's speech at that event. On the borrowing cost front, similar to mortgage rates, the government had an auction Thursday, actually, sold $25 billion of 30-year bonds, and the rate was the highest since 2001, 25 years at over 5.2%.
Wow.
That's a definite negative. The reason is just deficits and the total debt in this country. We have to get a handle on that. Today, we're spending $1.3 trillion a year on interest alone.
Just interest.
So it's like a self-feeding problem. Interest rates climb, we pay more on interest, drives deficits higher. So
absolutely,
we definitely have to get control on spending.
That we do. So I know that this week we actually did not have any of our companies actually reporting earnings. Next week we have a couple.
Yeah, we do. Deere is an excellent bellwether in the economy. Construction, business is booming, but also the insights into the farming community. They've been under a lot of price pressures, like a lot of people don't realize a lot of fertilizer ingredients pass through the Strait of Hormuz. Who knew, right? So farmers had to pay more for fertilizer. But again, it's similar to Caterpillar. Deere's construction business is booming, in large part due to AI and data center. Yeah. Walmart's another one that reports next week. Excellent bellwether for the overall economy. The average everyday consumer shops at Walmart. So we'll get a reading on that, how inflation is impacting them. They actually do very well with the higher end consumer as well. In fact, better than Amazon, the 100K plus income earners through Walmart Plus. So that's a good insight into how they're spending as well. We did have Boeing in the news this week. They're selling 3 units, Whisk, SkyGrid, and In Situ to Archer Aviation, which builds electric air taxis. I like it. Ortberg is the new CEO of Boeing. Done an excellent job turning that company around after all the issues they had in previous years. He is laser focused on building airplanes and their defense business, and both are doing very well right now. So this is a secondary business. I like how they did the deal, though. They're taking an equity position in Archer Aviation. So should that business take off, they'll participate in that. Goldman Sachs, they're always in the news. They're acquiring ETF company, Dos Investments. That'll add about $32 billion to their ETF assets, which will now total $130 billion. So they're making a push. Their investment management group manages several $1 trillion. This is a push into active ETFs. So good strategic fit for them. We had IBM in the news, though, Eric. Why don't you talk about that?
So I know that IBM's price has actually been punished most recently. Again, this is a company, really bad idea to turn your back on. They've actually reinvented themselves several times, and they may be on the verge of doing that yet again. Right now, there are 2 main frontier models out there, and so they've ultimately cast their vote as far as who they're going to go ahead and work with. They're going to work with OpenAI, with their ChatGPT, and also with their Codex. So what they're doing, they're actually using the OpenAI tools actually throughout their Consulting Advantage platform to deliver basically the Consulting Advantage 3 main areas. One is modernizing outdated systems. Number 2, speeding up software development. And number 3, strengthening cybersecurity. These are the main modes, and main goals, of course, for a lot of companies.
Important areas today.
Extremely important areas. So they're actually going to be training and actually providing, and I love these new terms, right? The forward deployed engineers. You're going to hear a whole lot more about that going forward. But this is really going to be end-to-end enterprise transformation for IBM's Consulting Advantage. I'm really excited to see how this turns out for them. That about wraps it up for this week, as a matter of fact. So thank you again for spending some time with us. We hope you have a wonderful weekend. And as we say here at SGK, cheers.